Bonjour à tous et bienvenue à cette table ronde.
Good morning, everybody, and welcome to this roundtable, which is going to enable us to look at the economic situation in France and around the world with this question: recession avoided or delayed? This is a question which doesn't have the same answers depending on the geographical areas. In the Eurozone, for example, it's been in a technical recession since the beginning of the year. So to look at the situation, the prospects, and also to look at avenues for the future and for hope, which is the theme of our rencontre. This year we have 5 speakers: Valérie Baudson, General Director of CEO of Amundi, the #1 in Europe for asset management, one of the 10 largest players in the world. Mathias de Dogart, who is the member of the Guardian and a private asset management company. Jean-Louis Giraudoul, Managing Director of CEO of Lazard Frères SAS, one of the world leaders in financial consulting and asset management. Adi Di Marzio, the CEO of Bain & Company, which is a consultancy firm, one of the main world players in the sector. And then we also have the pleasure of welcoming Georg Kukies, an economist by training and today Secretary of State for the Federal Chancellery of Germany in charge of economic affairs. So we are very pleased to have you all with us. We're going to look at the economic situation. Before we hear from you, I'm going over to André Cartapanis, who is a member of the Cercle des Économistes, who is coordinating this session. A distinguished professor at political science in Aix-en-Provence. He's going to give us the keys to understand and try to ask questions about the future. Thank you very much, Anne-Laure. In 5 minutes, I'm going to try to give you the landscape within which we are going to be discussing various subjects during discussion. The first 4 sessions today aim to give an analysis of the situation with a summing up of the uncertainties and the configuration at the macroeconomic level in Europe and worldwide, where there are many questions that need to be asked and we need to make some recommendations. And we're going to do this more precisely about the rate of economic recovery. We have to talk about recovery after the pandemic, and it's true that it's quite a difficult question because the forecasts prove often to be inaccurate. The clouds are of many kinds. They can be negative and positive indications. The Eurozone is in recession, as you said, technically, for 2 successive quarters now, with a reduction of GDP. This isn't the case in France. It's not the case in the US either. And so we have a fear which is of stagflation, which may start to take place in the world economy. This situation is something we've already seen in the past. Typically, when we look at the situation post-war, in the last century, we had similar configurations. For example, as a reconversion crisis in 1920, followed by a renewed inflation, which very quickly was replaced by the effervescence of the crazy years, and in the 1948 and 1950, and during that period, when we had the restarting of economic activity, there were various jolts and return of inflation, and all of this was the preliminary to the 30 glorious years period. And so these are phenomena which we've already been observed. So to come back to 2023, what are the factors that justify these uncertainties concerning the economic activity? We can mention 3. The increase in rebound in inflation, which justifies the increasingly hardening policies and monetary policies and the increase in interest rates by the central banks, the end of whatever it costs, quoi qu'il en coûte in France, and so much more stronger position in terms of budgetary consolidation, and also geopolitical uncertainties as well. Testimony of that, of course, is the war in Ukraine and between Ukraine and Russia. And so, therefore, given these conditions, what is at stake? What are the responses we can prepare for? As part of this session, we wanted to give an original analysis of a question which first and foremost is macroeconomic. And so by calling on various speakers who are going to talk about their experience, what they've experienced on the microeconomic level. And so we want to see whether there is a kind of echo given to this macroeconomic preoccupation from various companies and investment funds. So one of the things I've asked these speakers to do is to look at the heart of the matter, in particular the question of investment. The level of investment, which is at the same time an element of overall demand and plays an important role in the cyclic nature of the economic activity in the short and medium term, is at the same time the key element for reconversions and for reorganizations and recompositions and for taking account of the requirements in terms of decarbonization and digitalization. It seems to me that on the macroeconomic level, it is vital to be able to trigger what I would call an investment shock. This investment shock is nothing more or less than a change in scale of 1 or 2 or 3 points of GDP of investment compared to the trend we had before the pandemic took place. The question that is therefore asked due to this, in the face of this investment shock, is to see what is the perception that companies have at the moment. Is it a question, this question of investment shock, is it something that companies are aware of? Is it part of the investment plans and the different short and medium term programs of investment? Is it on the agenda? And the second aspect, if it is on the agenda, perhaps, what are the constraints that the companies have to deal with so that we can then translate the incentives on the microeconomic level to the macroeconomic level so that we can then have sustainable growth which will be inclusive also and which will represent a new trajectory to enable us to exit this crisis. That is the framework I wanted to give very quickly. Thank you very much. Thank you, André Catapanis, for these considerations. We'll start straight away with you, Valérie Baudson from Amundi, the CEO of Amundi. What is your analysis of the worldwide economic situation? Well, my analysis corresponds to what has just been said. Indeed, the main factor is this very strong increase in the central bank interest rates in order to try to bring down inflation, get it down to 3%. And this has brought us into a cycle of deceleration of worldwide growth. What we believe is that in 2023, worldwide growth will be around 2.7%. What's important to mention, apart from the figures that we were talking about for Europe earlier, is that we imagine that the United States will also enter into a technical recession by the end of the year. Only a slight recession, nevertheless a technical recession by the end of the year. So in the end, the remainder of worldwide growth will be carried by the major emerging powers, India and China in particular. So, what are the forecasts? First of all, the inflation will come down, but we can all observe that it's still persistent. It is more persistent than had been anticipated, in particular in the services sector, and in particular when we're talking about the core inflation and the consequence of that, that very likely the central banks will maintain high interest rates right up to the end of this year. And therefore, the question we have to ask is what will be the nature of the next economic cycle? I think there are several factors to take into account. The first one, as we have already mentioned, is that we are in a period where the geopolitical tensions will remain and they will continue. They will probably be centered around questions of a battle for raw materials required for our new energy systems and our new technological systems, which will change the relations, geopolitical relations around the world. This makes it difficult to see into the future very clearly. However, I can see two positive elements which will have an impact, probably not in the short term, but more will have a positive impact, no doubt. The first, of course, is the subject of the fourth technological revolution that we're in at the moment. Nobody is capable of saying today what will be the productivity gains we're going to be able to achieve, but certainly there will be productivity gains in the area of services, and that is potentially good news for the future. The second, as you mentioned, is the subject of this transition that is taking place, where more and more governments and companies are entering into this transition. And it is this transition, of course, that will generate greater investment and, I hope, sustainable economic growth after that. In the very short term, on the subject of investment, because that is our business, of course, as the largest European asset manager, we have a very prudent position, of course, on the markets, in particular in the terms of the shares and allocations, because we believe that the valuation of the shares today are too high, looking at things objectively. And so we only invest in companies that are highly resistant to inflation, so consumer goods and the basic commodities, and there's some emerging values as well, which are not overvalued in the area of bonds and the financing of companies. We have most of our investments are in companies with a high level of credit, and also the government bonds, which have a high yield, of course. So that's my vision of the economic situation today. Thank you, Valérie Baudson. I'm going to turn to you now, Matthias Weergaard. Matthias Weergaard, do you also believe that the energy transition is important and will play a role in growth? Yes, absolutely. Just to come back to what André Cartapanis said, it is interesting when we look at the parallel with the post-war period. In the parallel there, we believe that there is an economy that has to be rebuilt after COVID and after the war in Ukraine. So we can see that the economy is growing thanks to the de-globalization over the last 20 years and the calling into question of this globalization. Our companies today, and I'm talking about our companies, the ones that we invest in, and where we want to encourage investment in these companies to have growth. These companies are dealing with less growth and higher inflation, and what worries them the most is the volatility of the financial markets. We can see today that it now is the end of money being a commodity like another. Money is becoming rare and expensive. The markets are very volatile, and this is what worries companies the most. It's not really inflation. It's not really the growth level. It's more the fact that there's a lot of volatility. So in that context, the energy transition is not only an absolutely vital to protect our environment, but it's also a way of modernizing and changing our economy. And it is the businesses, companies that will be able to provide the best performance in the environmental field, who will also be able to create the most value. We absolutely believe in that, and this is something that more and more people are realizing. All of the company leaders are starting to now, all of the asset managers now are starting to invest in that kind of trajectory. What's very positive is there have been announcements of gigantic plans to carry out this energy transition with the anti-inflation law in the US, with 250 billion announced in Europe, 150 billion in Japan. If we do the parallel with post-war period, if we can bring that back to dollars today, the IRA is 10 times the Marshall Plan that enabled Europe to recover from after the Second World War. It's not so much a question of the amounts, it's how do we make sure that these amounts are used effectively. A lot of these sums are recycled, in fact. Whenever we have new programs, everything that is not used, which is quite gigantic amounts, is recycled. So how do we make sure, and here the companies come up against the uncertainties I mentioned, and they also have to deal with administrative barriers as well, and the fact that a lot of these programs are not suitable for their own, for them to deal with their own, for their constraints. And this is what, in my view, causes a barrier for companies, is that the complexity and the difficulty in implementing these investments. I think the second point that is essential is the acceptability by the largest possible number of people of this energy transition. We can see that in developing countries, they don't necessarily agree that they should compromise their growth whereas they have not yet achieved our standard of living. And so we're asking them to deal with the energy transition and do that, whereas they have a hopes for stronger growth. And secondly, we can see there's also a rejection in our countries of these transitional measures by parts of society who are the yellow jackets in France and in Trump. In America, a lot of Trump voters were a lot of climate skeptics, and so they've undone a lot of what had been done previously. I think the two blockages are the calling to question what is being forecast and the difficulty in putting in place these investment programs. Thank you for those thoughts, which are very interesting. Jean-Louis Giraudot, how do you see the economic situation? We've seen, for example, that in the merger and acquisition market has been made turbulent by the increase in interest rates. How do you see the future? Yes, thank you. I'll answer your question in two areas. First of all, by looking at what I think are the possible short-term scenarios, and then a second period, I'll talk about some of the medium-term considerations, which are a result of our dialogue that we have with companies as part of our business. In the short term, I see three possible scenarios. The first one, which we seem to be in today, which is what I call a marked landing. The second one is a missed landing. And the third scenario, which is a risk, and we've seen that with the regional American banks, is a scenario of financial instability and financial crash. The marked landing, I'm sure you're familiar with the parameters of that. In fact, we are in a big debate to see whether the gradual tightening of monetary policies within 12 or 18 months' time will bear fruit. And if in accompaniment to that, we'll be able to resolve the tension factors on the supply chain and the situation after COVID and on the price of energy, and above all, the employment market, which is the most resistant factor to the landing of these economies. All of this is taking time. It can be compared differently depending on the different consolidation mechanisms in countries. We've seen that in the US especially ever since the debt agreement. We'll see it in Germany. Georg will tell us about that. We see a lot less in France. We have a 5% deficit in economic finance this year, 4% the next 2 years. These are policies that are very expansionist for France, which can explain the differences in the figures we've seen for the last quarters between France, which is not in a recession, and other areas that are. So when we're answering this question, whether we're in a recession or not, it doesn't really matter whether it's 0.1 or 0.2, we're more or less in the same area. I don't think we should spend too much time trying to describe the current situation. The other scenario, which I fear, is the missed landing, as I call it. This is whatever it takes the other way around. In other words, the central banks are in a scenario of sustainable hardening because it's a question of their sustainability. The president of the Fed, Jerome Powell, wasn't to be the chairman of the same as in 1968, 69. He doesn't want to be Paul Volcker again. He doesn't want to have to manage a crisis and an inflationary crisis. You can remember that Clary Summers said in 2022 we'll take 5 years of employment at 5% or a year of unemployment at 10%. We're a very long way away from those kinds of situations. This means we might have a much more violent scenario of hardening where the underlying inflation, the core inflation, doesn't go down. It's at more than 5% month after month, whether in Europe or the US. And we can see that the risks of returning to high energy prices, which can increase inflation. At the beginning of the year at Davos, the president of the worldwide oil companies thought the oil price would be $100, $120 because of the Chinese recovery. We haven't seen the Chinese recovery. If the Chinese recovery does take place, there will be a new crisis. At the level of the central banks, we have to say, read me my lips, and simply believe what they are telling us, especially if it's a scenario of budgetary consolidation. In that case, the landing could be much more difficult. And I think this could be a credible scenario. The less worrying scenario is the crash. We've seen that in the regional American banks, the hypersensitivity of the banks' balance sheets to the increase in interest rates and the extreme volatility and the instantaneity, the possibility of being able to transfers and movements of finance very, very quickly on the internet. Bank runs now take place through a few clicks of a mouse, whereas it took a lot longer. And there's a risk of a cracking in the financial world. The level of world indebtedness is very high. The sovereign risk is high as well. Most of the emerging or developing countries have lost access to finance. At LASA, we are very much present in that area of business. We have some asset bubbles in some categories. We can see AI is starting up again. And if we look at some factors such as the CAP Schiller index, we look at the prices according to the cycle. We had quite a high point, about 30, whereas we were at 45 in 2000. We were 35 in 2019. So at quite a high level, which may be announcing a crash. Although we are better placed now to manage this than we were previously. Basel III and Basel IV and Sol 26 have enabled us to be in a better position. So the mechanisms to resolve banking problems are now in place in Europe. Ever since the major financial crisis, we now have mechanisms that which mean, from my point of view, the financial world is capable of resisting these crashes. If we now look in the medium term and what companies are telling us, I can three sources of concern to relaunch investment and for the growth scenario. We have a debt wall. I was talking about world levers, the indebtedness of companies, which was taken out at very low interest rates before or during COVID to have liquidity. This indebtedness is now very high everywhere, in developed countries and in sovereign countries, and in the governments and in companies as well. If we look at the S&P countries in 24-27, France is for 347 billion billion euros of refinancing. For Europe, it's 1,000 billion. For US, it's 27 billion. $3,300 billion, which have to be refinanced in the US. So these are huge amounts. And we can see that for a number of companies that have a lot of money to reinvest in the microeconomy, this is a difficulty that the financial sector overall, the banks, the bond markets and the private debt markets will also have to be able to absorb, because otherwise we're going to have companies that disappear. The second challenge is productivity. We know that for a long time we've been in a regime of slowing of productivity. At the moment, it's difficult to see the benefit for productivity of investments in technology. If we invest massively, productivity has to be there so that in terms of growth and overall well-being, the result of these investments are visible. Why is productivity not there yet? We could talk about that for a long time. Of course, there's the effect of working from home, perhaps. And the last point is the energy issue, which is absolutely central. Valérie and Matthias have talked about this. Is very ambivalent, because the energy issue, we've all read about the fact that 2 points of GDP in 2030 is the aim. We can see that there is the effect of growth being pulled upwards and an increase in growth thanks to this. This is ambivalent because some of the investments are made by institutions. They don't create new capacity but replace each other. And there's also a question of mobilizing savings, and I'm turning to the green economy. We have to mobilize savings in this area, and also, especially because above all, the energy question has a negative impact, and that worries me a little bit. The energy prices today for gas are 3 times higher in Europe than they were before the crisis. The prices of electricity are still twice as high after a very warm summer. So Europe is in sustainably in an uncompetitive situation in terms of energy. Energy prices are much higher than anywhere else. When you're an industrial company, when you want to invest in Europe, this is a real problem. And I think they hear that Europe had found in itself the means to respond to the COVID crisis. When we compare the 2 exits from the crisis, the exit from the financial crisis and the COVID crisis, Europe is not very well mobilized and is not in a good situation. I think Europe needs to be stronger and has to take much more stronger action faced with the economic crisis.
À vous la parole désormais, Haddad.
Now the floor is to Daddy Adam Di Marzo, the global slowing cycle. How do you support your clients going through this phase? Thank you. I think I'm going to take it under the angle of the works that we do with our clients on the ground. And of course, during those times, we have watched closely what's happening in the sector. These are times where the gap in performance in the sectors are getting bigger. And they're getting bigger because of the capacity of some actors to keep a continued investment. This is a very important element because if you don't have your capacity to invest, you won't be able to invest for the future, as Valérie said. So if we look at it more closely today, our clients have been investing for a while on issues that are non-negotiable: digitalization, intelligence, artificial intelligence, digital transformation, but also the change of the work methods and processes. Of course, these investments can entail slowing down because the credit conditions are getting harder, but it makes just the decisions more selective. And our clients are more demanding because the credit becomes more expensive. It's not necessarily creating growth. But we're remaining very optimistic because if we look at the savings of the French people, we're 200 billion for 2023. Of course, the savings is a saving made out of precaution. It will need to be focused to support other transition programs. The European recovery plans, there's budgets that we've ever seen, 700 billion. For example, those are very, very high numbers. The question is, how do we finance them and how do we deploy them? Also, the stock-listed companies in the last few years have made very good profits. Last year, these listed companies have invested more than the year before. So we're remaining to becoming optimistic on this flow of investment. But the question remains is how do we if we work with clients on the ground, how do companies manage to keep investing for the future? And this is where the difference is being made. We should lose sight of the fundamentals of business, managing a business on the long term. The first one is how to manage the cash flow. Now it has a price. Second is to protect your assets. When I say protecting your assets, we have a tendency to only talk about real assets or intangible assets, but we also have the human assets, protecting the talents and the skills of our team members. Look at the tensions on the job market. Third element, continuing to work on the loyalty of the clients. This is often underestimated, but that really comes to play in the turnover of a company. To do that, you have to have capacity for investment, you have to be selective, but you also have to have an efficiency policy. What does that mean? To require efficiency even when we don't have a recession, because when this recession is going to come, you'll be ahead of your competitors. So I'll give you a few numbers. In times of uncertainties or slowing down like of today, we see that there's 50% more company that goes from the fourth quartile to the second quartile in terms of profitability, but we'll also have twice more companies that go the other way around, which means that there's a real benefit to going back to the business fundamentals. Thank you very much, Ada Di Marzo. And we will finish this roundtable with you, your cookies. We want to hear you out on the world situation, but I'd like to hear you out on your own country as well, Germany, that started a recession. Can you explain to us what are the causes and also maybe what are the policies that you implement to mitigate this situation? Yes, thank you. And if you allow me, I will switch to English. I learned that new word, a French word, switcher,
because I can articulate myself a bit better. So, of course, we suffered probably more strongly than other European countries the terms of trade shock that all of Europe experienced with the higher energy prices. But, of course, due to our over-reliance on Russian sources of energy, the fact that we were so dependent, over-dependent on 55% of our gas came from Russia, 40% of oil, 40% of coal. So in fact, I was told exactly in this tent, exactly a year ago by one of the people who intervened, that we couldn't afford in Germany to get rid of Russian oil, gas, and coal. And the German economists that were discussing this eventuality about a year ago said that if we got rid of Russian sources of energy, the recession would be, the optimistic ones said -3%, the pessimistic ones said -8% or even worse. So in that sense, the fact that we've been able to withdraw from Russian energy completely, we have zero of oil, gas, and coal from Russia now as we speak. And they're therefore, of course, paying for the over-reliance on this Russian source of energy through the much higher exposure to the terms of trade shock that came from the higher prices that were mentioned several times. But relative to expectations, being close to zero in terms of growth is actually better than expected, as tough as it sounds. But still there's, in addition to this terms of trade shock, of course, additional sources of pressure. One of them, of course, emanates from the price increase as a result of the terms of trade shock, namely the weakness in our domestic consumption. And that is certainly something that we are struggling with. That consumers are reluctant and are still very cautious in terms of expanding, even though I'll talk a little bit about the fiscal policy measures that we took against that. The second source of economic difficulty is, of course, textbook economics when terms of trade shocks increase inflation and feed through second and third order effects. The fact that the central bank increases interest rates, of course, hits the construction industry probably the most immediate. And given that we had the first real estate boom in the post-war history of Germany ever, that really affected our growth in an adverse form. I think everyone in Europe is suffering from that. But because we had a very strong growth of the construction sector, that is hitting our economy. Then the next factor, of course, you said la reprise chinoise n'est pas là. And we really noticed that because of our high export exposure to the Chinese economy. And a lot of our base materials, a lot of our machine tool industry, and a lot of the sort of leading indicators of exposure to la croissance chinoise, and of course also global growth is slowing down, and some of the numbers that we've seen are indicative of that. So in that sense, there are challenges, but on the other side, and I think that gives me also cause for optimism, we are seeing quite a strong resilience of the economy. So there was not a sharp contraction, there was not a sharp decline, and we are seeing through all of these adverse indicators also a lot of positive signs. First of all, the replacement of the old capital stock with a new one is happening. And I do think I fully agree with you that we can't make the mistake of saying, oh, it's all wonderful and all of this renewable energy is going to cause a huge capex boom. First of all, we have to replace the inefficient and very fossil old stock of capital. But the good news is we are seeing that this is happening. And the other good news is, of course, the much lower carbon intensity of the new capital stock and the energy produced with that, and B, the much lower levelized cost of energy from renewables relative to fossils. So we are seeing already the measures that we've taken last year with massively accelerating the planning and permissioning time for renewables, declaring renewable energies in the national public interest and the national security interest is having an effect on the court system, on the approval system already 1 year into the implementation of those policies, both in the quick to build sectors, i.e. things where we've just accelerated existing projects, but also in the interest of global investors in the new projects. We've just had an auction for offshore wind where we are doubling in one go the capacity of our offshore wind production from currently 7 gigawatts of installed capacity to 14. And that's only a first step. The same will happen in the second half of this year. We have another 7 gigawatts coming. That'll happen in 24, that'll happen in 25, and that'll happen so long until we are at 100% renewable energy in our electricity system by 2035. So this CapEx wave is coming, and it is replacing the old stock of fossil production very quickly. And if you just think about the maths for all of the economists out there, this is probably too simple, but it's true. 1 gigawatt, so each of the 7 gigawatts that we're building now in the North Sea will produce electricity for 1.2 million households and will trigger immediate investments of 2 to 3 billion only in the construction and another 2 to 3-ish billions in the transmission grids thereafter. So this is really a very sizable investment wave that's rolling in our way. And even though that is at first replacing coal and gas, it is doing so in a very capital-intensive way. And of course, that will pose challenges because the corporate sector and the banking system that has to intermediate all of those capital expenditures will have to, A, build a lot of capacity, which is already happening with a lot of inbound investment coming in, and it will have to, of course, finance that, which is not trivial because at the moment there's not many companies who are capable of building out this wave of investment, and the financing of those, of course, will pose on the one side challenges, but of course also opportunities, because we can already see the banking system in itself will not intermediate all of those flows. So we need to be nice to Valérie and to everyone else who can provide the capital that we need for this transition. What we're also seeing is the digital transition of our economy, bringing in a lot of capex. Just within the last year, we've had 3 very large and 31 further big investment projects in the semiconductor industry. And Germany has, similarly to France, decided that in the semiconductor industry, we don't only want to play Ligue 1, we want to play Premier League. And while, in France, in Grenoble and many other regions, there's a large and vivid semiconductor industry. The same goes for Germany and Dresden. We've now decided to really go into the Champions League of semiconductor production and development. In Germany, we've attracted Intel to do a 30 billion euro plus investment, which is the biggest foreign direct investment of all times in the history of Germany. We are supporting that with very substantial public support, which is necessary given the state of the semiconductor industry in the world and what the US is doing to attract the same type of investment. But I think it shows that these investments are happening. The fact that they're not unique is really the biggest case in point. The fact that there are second and third round effects. We've had a 5 billion investment by Infineon in Dresden. We've had a 2 billion investment of Wolfspeed in the Saar region. And again, we just approved 31 other semiconductor and microelectronic investments across Germany. And you're really seeing the interest picking up. You're really seeing a lot of industries and a lot of startups that need fabs because they want to do less capital-intensive forms of semiconductor development and production that are piggybacking and already planning capacity out for this. So in that sense, it is for real that these investments trigger second and third round effects. In fact, we've just announced in Germany the record number in our post-war history of new foundation of companies that we've ever had in the middle of this difficult economic situation. So I would say, summing up, the glass is half full.
Merci.
Donc, we have about 15 minutes left to wrap up the session and maybe take some questions from the room. I would like to ask one of the questions that we got on the chat. What is the impact of the no matter what, whatever it takes, and the withdrawal of the cash flow on the growth and maybe on investment cycles? So what is the impact of the whatever it takes and the withdrawal of part of the liquidities by the Fed and the ECB? I believe that the end of the whatever it takes was absolutely necessary. As somebody reminded us early on, we are today in a situation where indebtedness has never been that high. And it was, of course, imperative to put an end to that. So in the current situation, and that's what's going to be very interesting to watch, is the interaction between the budgetary policies and the fiscal policies. We'll have some states which, if we move further into the recession, will want to support their populations and to make it all sustainable and acceptable by the socially. So I think it is a blessing in disguise of the end of this whatever it takes, and we can expect some support in the coming years. Yes, I fully agree with what Valérie said. I think there are two sides to your question. There's the budgetary side and the fiscal side. On the budgetary side, the rates are up, but there's still a lot of liquidities. The P&L of the central banks are not that bad. They're reinvesting, but they're not reducing drastically their budgets. And we can see that these liquidities feed the price of the assets and explain that the price of the assets remains high. The work is yet to be done on the liquidity side. We have to do it with subtlety, and we have to do it also on the budgetary side. Very few states have started the budgetary consolidation that is absolutely necessary. Germany has done it. At least they have started doing it.
I think the whatever it takes, the English translation, is one of the defining moments of monetary policy against the crisis that we've ever had. And I know that in my country, Mario Draghi was heavily criticized, but personally and for the German government, Chancellor Olaf Scholz said it all when at the 25th anniversary of the European Central Bank just a few weeks ago, he said when Mario was in the audience that this will go down in history as one of the defining positive moments of decisive combat against crisis ever in history. So I think that was really very strong, and it paved the way both during the Corona crisis and the response to Russia's aggression against the Ukraine for decisive combination of monetary and fiscal policy. And I think just like the European Central Bank reacted very resolutely to the Corona and the Russian crisis, fiscal policy also reacted very resolutely. And now is the time to taper down in both. I won't comment on monetary policy, but Germany just published a balanced budget because we think that now that we're going into sort of a glass half full kind of world, we have to start at least thinking about and carefully rebuilding the fiscal capacity that we might need in the next crisis, which inevitably will come one way or the other eventually.
Merci.
Thank you. I would like to add something on a sentence that you, in your presentation, André Cartapanis, you said for major companies, the logic for shareholders lead to a major buyback of assets or mergers and acquisitions. Does anybody want to react to that? Do you want to maybe explain more what you meant by this? Yes, if you look at the part of the profitability of companies that was created, that is not going to paying the shares or buying back some shares, but is going to productive investment, we can feel some concerns from a point of view of the mobilization of this profitability in the recomposition of the productive machine and equipment. Of course, it is a logic. It is a logic for the shareholders. It is a logic that we have followed for a number of decades, but I don't feel that it plays today the role that we're expecting from a point of view of the part that the companies have to play in the reconfiguration of the productive system. that's how I can rephrase my comment. But I would like to ask the question to the panel. I follow Mathias Begard. I follow your opinion. The buyback of shares is a way to say that there's no investments. Why companies make these type of decisions? First of all, is because they are uncertain about the future, and we have the same thing of the amount of subsidies that is not being used. It's a difficulty to invest. That's what it shows. If companies cannot invest, they should rather give back the money to shareholders so they can invest them in sectors that are more profitable, more successful at the moment. So when a company does some buyback of actions, it shows difficulty to invest and look at the future. So Ada, what do you want to have to say about this? We have a lack of productivity, and at some point, we have to reinvest. If you look at the latest progress in terms of artificial intelligence, and particularly regenerative artificial intelligence, we see some impacts that are huge. If we look at more closely, we are we're on the ground, and we look they work on the ground by using the artificial intelligence because they get some information more quickly. And what can be brought in terms of answers as advice, you can mobilize the stakeholders, because it will be a way to mobilize the client to be more committed and to create productivity, because what we're trying to do with the same people, the same tasks, or tasks with added value. And that's what we're doing with our clients. So we underestimate the importance of these investments at the long term, and we underestimate the importance that these investments will have in the reconfiguration of the value chains, particularly in a context of energy transition. When we work with a company, a logistics company, and we try to see how they were going to reduce their carbon footprint, it's a real revolution, because we have to reinvent all the processes, the transport, the types of fuels that are being used, the charging methods. It's all done with technology and artificial intelligence. And one day we'll have to go further on that, and that the state will organize a program of long-term investment. Why do I say that? Because we need to have a financing equation that is equalitarian. And equality means offering some long-term investment options to people that could be guaranteed by the states, because we give them some state guaranteed loans, allow the people to refinance their own energy situation. And so they will allow a lot of the people who have saved up to have used this massive liquidities. Valérie Botson, 2 comments. First of all, the topic of the chronicle underinvestment for the last 2 decades is the relationship of time with over time with their shareholders, of company with their shareholders. This time relationship was too short term, so the companies could take the risk, or want to take the risk, to invest on the long term on their business model. And I believe this is one of the most negative impact points of the financial markets. Where I look at the half full glass is where I realize that this awareness that is very strong, except for maybe a part of the US, but in Europe, very strong in Europe and in Asia, of this awareness of this necessity to finance the energy transition, means that the shareholders, including shareholders of markets, ask the companies to commit to transform their business model and sometimes disrupt it. And we need these companies to disrupt their business model, because it is an industrial revolution. Like Jörg said, there's not that many companies that manage to do it. Today we have enough money to do it, but we don't have enough projects. And we sometimes forget to say it. Even if we need a lot of money, at my level, I see that we're not short of money. We're short of ideas and projects. So we need to support these companies, and more the shareholders and Amundi, to begin, will support the companies that invest on the long term, particularly within the framework of this energy transition. I fully agree on the fundamental role of the state in how this investment should be framed and marked. We should not have a framework. We have to have a framework that allow the companies to sleep at night, and the financials to guide their clients as well. So we need, as asset managers, such a regulation in Europe. We need states that can intervene to define industrial policies. Jean-Louis Giraudol. Valérie stole my light, but I agree with her, because we have a relationship with their shareholders, and this buyback of shares reflects this relationship with the world of shareholders that is completely changing, particularly in Europe. The second thing is in my activity, in my business, I don't know one company that gives up on investment that they need, or that if they find economically sound. I don't know one. So I think we're short of projects. If there were more projects, there would be more productive investments. And last point, at least in the transition, and last point, and this comes from the period that we've known of very low interest rates, where the structure of the ideal P&L pushed the companies to be in debt. And if you look at that ideal structure of P&L, where you don't know what to do with your money, well, you give it back. This is going to change as well. Thank you for this optimistic note. We have very little time left. I don't think we'll be able to take a question from the room. Do you each want to say a word of conclusion? I would like to end by using the words of Jörg as the company manager director. Despite the economic situation, we have to project an optimistic vision of the future, because this is how we make the world move forward. I would like to go back on what I said. For Europe, energy efficiency is urgent, and we shouldn't be obsessed with costs, such as the German economy that focused on only one source of energy. We have to diversify our source of energy. If we look at this fine-tuning from a macroeconomic point of view, and we have to go into an area, a zone of risk, we're going to have to manage very well the budgetary and the fiscal policies, and the level of worldwide indebtedness. We're looking at something that we cannot even imagine, that is a complete transformation, like the Industrial Revolution, but they're going to do in the short time span that we did for the 30th glorious years. It entails an economic transformation of companies. The companies are already mobilized on the energy transition. It has become a real goal, pushed by the shareholders, of course, but the states as well will have to jointly, at the European level, get mobilized to create a framework. For both of you, we're at the end of this roundtable. 2 points. These are times where we have to be bold, and we're short of projects, and being short of projects means that we need managers that can think of out of the box. That's our point of view today. We have to increase this capacity to be bold and to take risks.
To include one thought that hasn't been discussed yet, and given that there's so much sources of capital sitting on this podium here, what is the possibility for changing international trade flows from this energy transition. One of the continents that has the best predisposition to benefit from the revolution of renewable energy is Africa. And the business models that should be built to both allow Africa to benefit from this access to wind and solar energy, but also to improve its global trade position by exporting in form of hydrogen, potentially in form of electricity. A lot of this economic potential, I think, has been so far underutilized. And while we're seeing business models in the Middle East being very well funded because the cost and the spread of financing is low, Africa hasn't yet benefited from this. And I think one of the big challenges that we face, but also one of the big opportunities that we have, is for business models to evolve that both generate and distribute the power within Africa, but also generate new sources of revenue and economic potential through exports.
Merci beaucoup, merci à tous.
Thank you very much. Thank you to all the speakers for your